Hey there, how you doing? Welcome to the channel. So today's going to be our stock update for March 25th, 2021. Just kind of go through what little bit of the things that were going on today in the old, the old guy slow moving world. That's kind of about my style. So here we look at the SPY. So that's, the S&P 500 ETF. So today over here, I guess we had a pretty nice accumulation day here. You have an increase in volume over here, and it kind of bounced off the 50-day. So you can see that we kind of been in this downtrend in the short term here, and we now have this, it kind of found support at the 50. So that's pretty positive for like the S&P 500. So that looks really good. That's really encouraging because it's like, okay, we're in an uptrend intact, comes down to the moving average where you would expect to have support. That looks great to me. Let's look at the XLP because this is the consumer staples. Now this is kind of cool now. So I'm looking at a weekly chart now. I guess let's try not to confuse it. Let's start with the daily chart. So this thing has come out over here, just come out of the gates running. It's just running, and today was a big day too. Not big, but 1%. It's good for it. And among other things to kind of notice is, see over here, it's kind of peaking out above the previous highs over here. So, so that's kind of interesting. So it looks like this is stronger. So now I can compare it to the S&P 500. So I'm comparing the XLP to the S&P 500, and what you can see here is that the red line is your S&P and your green line is the XLP. And you can see that previously, earlier on, the S&P was leading, but now what we have is the XLP is kind of, the green line here is just going straight up. So right now the green line is actually what? It's actually stronger right now. It's outperforming the overall S&P. And that looks, at least for this small period of time. I mean, we'll see if it keeps going that way. But yeah, so, because what you see here is your SPY, it corrected. Now, okay, so what's really happening here, the XLP got beat up more than the S&P. So we're going back to February and March, and when we had these, kind of things pulled back, the XLP kind of did worse. So now it's recovering faster. So don't know about that, but it could be, and could very well be that, there's sort of a rotation here from into more consumer staples. XLP is the consumer staples. Maybe there's some kind of rotation into that. So now let's look at our NASDAQ. This is, well, I mean, up a little bit. I think the positive thing you can say here is, well, it found some support. One thing to note here, look at this, the volume was lower. So if you look at that volume, it's not an accumulation today, because you didn't really have much volume. Let's look at the Q. Okay, but you know what it is? You look at the ETF and it did have volume. So maybe it was accumulation day. But this is much worse position here. I mean, you compare it to where we were just at, where we're above the moving average. Here we've got, in the short term, we're downtrending, and medium term, 50-day, we're kind of flat. So you can see that there was a lot more damage done on the QQQ. But it's good that it may have found an area of some support here and above the previous low. So we'll kind of see. That's probably okay. If we look at the Treasury yield for today, it didn't move too much. It looks like it's just a zero, but just, kind of keep in mind the big picture is, the yields are going up. You have a half a year trend of increasing 10-year yields, and now you've made progress. You've kind of damaged into this resistance here. You can kind of look at the resistance as a creaky floor, and maybe this is a zombie movie, and the zombie hasn't come all the way through, but it's reaching its hand through, and it's breaking some of the boards and kind of working its way into that. So maybe the zombies are coming through. And we'll look at the 3-month, the shorter term, and then let's look at the US dollar. So in the short term, see today, here's some things like the dollar's kind of like really moving here. It's moving up. And, short term's kind of trending. You see here, the short term 21-day purple is crossed the 50 and they're both turning up. And then let's look at a bigger picture out to weekly on the US dollar. And you see that, yeah, I mean, this is actually an interesting thing here, because this could very well be a trend change. I mean, it really sort of is pointing that way. You have the 50-day, you have the 200-day flattening out, and the dollar had gotten the crap kicked out of it over the last half year, and now it's looking like it's trying to find some support. It's breaking above those moving averages. The averages are turning, so it could be now something like this. You never know. I mean, it could just turn around and start going right up, or maybe it consolidates for a while and then goes back down. You don't really know, but there's if you were like short the dollar or you were concerned about the dollar rising, that's something you gotta acknowledge and pay attention to. Something may be going on there. And then I want to look at let's look at Apple. Did nothing today, up 0.5%, kind of like a lot of these other high beta stocks. I mean, the good thing here, well, no, it's bad. It's above the 200, but they're all in that same position. Let's look at ARC Innovation. It found some support today, but still down. So basically what happened here, if I look at a 3-month on this guy, so basically what's happening here is, it found some support kind of close to where this previous low was, a little bit of accumulation, but it's still, I mean, it closed below, so it's still down day, but there was some buying in there. So, but it's still in a bad position because the problem is, where does this thing open up tomorrow? If it, it could gap up, yeah, that'd be great. Or it could gap down. It could start below this bar here. And that's where it gets into real trouble, because if it breaks through here, you have, what's going on. You have Meet Kevin and his crew, and what are they going to do, man? They got to start selling some Bitcoin if they get margin calls. And so the ARC is looking like that. Churchill Capital is looking like that. Once again, kind of found some support today, but still in a really bad position. Let's look at Enphase, same kind of thing. Oh, a little bit of an up day, but not really. Kind of once again, all these charts are trading together. The outperformer of the day, though, GameStop, looks like 52% gain. That's crazy. So, well, good for GameStop. I mean, I guess you're looking at this, something seems going on with GameStop. It is, it's not trading like the other ones. It's above its moving average, extremely volatile, but something's going on. So that's definitely positive sign there. Then we have our NEO, which is like the rest of them, just kind of in a really bad position. And our Tesla, really bad position. What did our oil do today? Oil down. Because really that oil tanker, it's not an oil tanker, right? But they had that ship. It's basically a cargo ship got trapped in one of the canals. It's so funny. Like, how does that happen? People wonder about it, but they lose control of these ships. And the problem is once you lose control, they're so huge. The wind, everything pushes them, and it's just like they can't get control. But it's pretty impressive. And then we have XPEV. So, so you basically have a little bit of reprieve here, it looks like. So if you're, suffering 10%, 15% losses yesterday, I'm sure it's a relief to recover some of that. So, but really nothing's changed. Like if you look at a chart like this and you look at it, you're still downtrending. You still made a new low. So, you got to understand that you still made a new low, and you closed positive relative to yesterday's close, but you're still in a downtrend. I mean, here, would you say like, oh, this is like an uptrend, or no, it's nothing. You're still in a downtrend. So, it takes a little bit more, you have to have more pivots in there to really get around the corner on those. So, maybe that'll happen. I can see it. I'm kind of surprised we just haven't got much of a boost from these, the checks, the stimmy checks just haven't really done much good. So that's been kind of a surprise. Now, one thing I want to talk about, so not stock related, Um, I saw a video on this Lebanon. So apparently Lebanon. So here I am in the New York Times, and they have a story up here about Lebanon, what's going on there. And so there's some protests going on, and there's really some serious. They're basically having like a currency crisis, and I think that. If you've listened to like the Peter Schiffs of the world and stuff, guys like that, they always talk about U.S. is going to have a currency crisis, and we really haven't had that because we are the world reserve currency. We're doing, I would say, in my opinion, everything we can to lose that position, but it's the amount of inertia. It's like speaking of tankers, oil tankers, and cargo ships, that are huge. It takes a massive amount of energy to kind of change the course. So, even though we are doing deficit spending beyond like crazy, and all that stuff has caused in many cases inflation in other parts of the world that has caused pain for people. We've been lucky in that we really haven't had significant inflation in the US. We haven't had hyperinflation, and we haven't had what's going on here. So now back to what's going on here. This would be an example of a currency crisis, and this would be kind of an example when you're listening to these guys talk about like what a currency crisis is. So we're going to try to show what's going on here just from what little information I have. So basically, the country's economic distress grew more acute last week as the Lebanese pound sank to 15,000 to the dollar in the black market. So what they're talking about is basically, Lebanon pound is not like much of a currency apparently. If I'm a company running a gas station, or I'm a supermarket or whatever, and I have to buy something from another country, I got to use dollars for that. I can't use the Lebanese pound. They're not going to take it. So therefore, I have to exchange my Lebanese pounds for dollars. So if I have to spend more of my Lebanese pounds to get a single dollar, it's costing me more. And this is, of course, what happens like in the US. We've been immune from this generally because a lot of the stuff we buy on the international market, particularly the oil, is priced in dollars. So if we inflate the crap out of the dollars and print a bunch of dollars, we've been lucky, and the value of it hasn't gone down that much, right? So we've been really lucky. But in a small country like this, it's a real problem. Okay, so what's going on here? So the Lebanese pound sank to 15,000 to the dollar on the black market. So what that means is their currency, the people there are day to day living their lives in Lebanese pounds, and they, it spiked here to 15,000 of those pounds to get $1. And then here, since it rebounded, and then over here they say since it rebounded to about 12,000. So you can see these are really large numbers. So you're looking at a currency that's like devalued a lot relative to the dollar. And you need to understand, like, if let's try to use a really simple number. So let's say if it was $10,000 to the dollar, and I have to buy something that goes through a process of being imported where someone wants a real dollar, and if it's 10,000 for a dollar, and then it goes to 15,000 a dollar, that's a 50% rise in that. And I will see that because I will feel that 50% hike in price, right? Because I need, instead of 10,000 of my currency, the price of it, the effective price went up to 15,000. So that's what happens to these countries in the currency crisis. And the problem is what goes on is, if the government is mismanaging the currency, it can lead to this kind of thing. So let's try to go a little further. Now, this has happened before. So now I don't want to talk about the explosion. That's not, I don't think that's the major thing here, but they talk about things like food prices rising 400% as compared to a year earlier. So 400% is 4x. So once again, put that in your own perspective. Like say, like whatever you're paying, if you're paying $200 a week for food or anything, or a burger at a restaurant or a sub, and it's cost you $10 now, think about it costing $40. That's what's happening. And so this is really important because this is survival. This is food prices. And this has happened in countries before. And you look at kind of the underside of things like some of the revolutions that have happened. And when prices go up for food, you're talking about survival, life and death, and you have other things here going on. So I guess so. Here they're talking about how they had it pegged. They had pegged to the dollar at 1,500, but then at some point they faltered and they lost the peg. And so this is the kind of thing that they do. Many countries do is they try to peg to the dollar, but the problem is that there can be a lot of pressure on that. So if I'm government A and I said I'm going to peg our currency 1,500 to the dollar, okay, fine, but what happens when the market pressures are pushing that to 2,000, 3,000, 4,000? How do you stop this pressure? Well, you have to find a way to absorb it, and that's where the difficulty comes in. The government tries to absolve that. Now they can print all the lira they want or Lebanese pounds they want, but they can't print the dollars, right? They can't print the dollars, so they can only control one side of the equation. And the fact is, like, printing more of your own currency makes the situation worse. It devalues it. Okay. Now, I would encourage you to really look at this stuff, because when you like try to understand, this stuff is happening now. We have hyperinflations going on we're somewhere in Africa, and we have this kind of situation, which is an inflation. This probably is not a hyperinflation. It's not that bad, but you got to understand how painful this stuff can be. And so here's an example, and it's really amazing, the numbers. See, when you're in a country, and she said her husband brought in 750,000 pounds per month as a driver that used to be worth $500, but now it's less than 60. So you can see how this is directly affecting people. Like, you're working for a job and you're making 750,000 pounds. That tells you a lot. Those high numbers, hundreds of thousands of pounds equaling $500, tells you your currency has been devalued. Right. And so that's very painful, because think of it in dollars, like, hey, what I used to make, I could buy $500 worth of stuff. Now I can only buy $60 worth of stuff. And remember the other side of the program. So the other side of it is, let's say you're in another country and you're selling to restaurants, and you're selling to supermarkets, more likely in Lebanon. And you just can't absorb this. You're on the other side. It's like, hey, look, I need to sell you. I need to sell this to you in dollars, right? Because I can't operate in pounds. So when these kind of big moves happen in the currency on your side, it's like, it's not their fault. They can't do anything about it. They can't just suddenly say, well, because the counter to that is say, well, why doesn't the guy just lower his price? Because basically, okay, this poor guy, what he was making as a driver used to be worth 500, but now it's 60. So if you go to the person you're trying to buy the 500 stuff worth and try to get them to lower their price, well, they can't do it either, because they're on the other side. They're in their other economy, and they're like, hey, look, I can't sell you that. Like, I would take a loss. So they can't just magically solve the problem. Now, this is one of those things where this is where U.S. foreign aid comes in. And because when you get to U.S. foreign aid in different places and things, this is where it becomes so critical. We have very small amounts of currency, but when you put it into a country that can't print the dollars, it can actually have an effect. And it's and that's kind of the thing, because if, for example, in here, you can't get it. They're not going to give it to people, but at least the government and maybe some, charity programs that are operating there, if they get the hard dollars, that's what you would call it, a hard currency. It's not a hard currency, but it's like more stable. Then they can actually, actually get the food that people need and stuff like that. But none of this solves the problem, right? None of this solves the problem. It's because the problem is the government is is mismanaging it. If the currency moves like that, and right now, and I don't know, I'm not aware that we have a bunch of there's a lot of sanctions and stuff going on right now, because, like, obviously, if you look at this, if the U.S. doesn't like you and we were trying to do something to cause your currency to devalue, right? That would be a way to hurt you. And I'm sure that, I don't know, and just speculating here that I'm sure with Iran and other countries that we've done things to do that, right? If we this prevent you from getting dollars, like preventing you, like exactly. This is what the U.S. has done to Iran, right? They said we're not going to let them sell oil, and that's how they get their dollars. So you can imagine in a country where they're able to sell oil, but here's the problem: Beirut doesn't have oil; they got diddly. So they, if you prevent someone from selling their oil, then they're not getting the dollars into their economy that they need to go out on the market. So so I just wanted to bring that up. I think that I think that when you see these things, also I would suggest reading this stuff, what's going on in Venezuela, because Venezuela is more like a hyperinflation. You see people carrying, it's almost to the point of wheelbarrows, this like big boxes of currency with $1 million units of currency, but they don't buy very much. And what you find is that everyone kind of struggles. And this is a great example to see what can happen. And so the question is, would this happen to the US? I mean, it's very like kind of unlikely in the short term, it's very unlikely. But you got to understand that geopolitically, there's all this stuff behind the scenes to de-dollarize, which means to use the dollar for less stuff. And as that goes on in time, it makes the dollar less, the less people using the dollar, less demand for dollars, there's more potential for the value of the dollar to decrease. And you always have to think of value of things, not in terms of price. You have to think of value in things and what they buy. That's like, a physical thing. You have to look in terms of physical things, buying power. You're not interested. We're living in a time of stimmy checks, and the George Gammon guy always makes this point. Well, if this solves everything, why don't you just give everyone $1 million? And it's just it's a great way of thinking about it. And you can look at that and say, well, that's just stupid. Well, no, it's not. I would call it a thought experiment. And if you think those are silly, well, it was a very important thing that Einstein did. He, like his stuff, when he came up with the relativity, where basically time is a dimension, time is not constant. It's a dimension that can change. It's a variable. When he did all that stuff, he did all these experiments where he was imagining himself on a train looking at a clock tower, and that really helped him work out the understanding of what was going on there, which is, of course, now like a very successful theory. I mean, we use relativity. Apparently, we use it for GPS and stuff. We take that all into account. If we didn't, this stuff wouldn't work at all, probably, is what I'm told. I don't know the details. So using thought experiments are a good way to just go to the next level. Try to say, well, if you keep going in this direction, where do you end up? So it's good that way. And so I think for like the US, you wouldn't see something like this, but what you could see is you can see prices going up, because if over time, there's less demand for dollars, because, for example, if other countries start agreeing like, hey, we're going to start selling oil in euros more than we do now. We're going to do more international transactions in euros or Chinese yuan or whatever, the pressures are there to do that. But, if those markets start getting a hold, then you would be in a situation where less demand for dollars. Now, it wouldn't be like this. These people really are suffering. It wouldn't be like that bad, I don't think. But you could see prices go up. Now, I just wish like people in our country would, in the West, mostly our country. See, this is what I keep babbling. But this is what's not understood. It's like, yes, Europe has deficits, and EU countries, they have deficits, but they yeah, they have a lot of social programs, but somehow their deficits aren't matching what we are. I mean, we are just throwing money, like having deficits as a percentage of GDP that are just getting absurd. And I don't think that theirs are quite as bad. And so you can imagine, remember, when other countries are using your currency, they think about that. They think about like, well, how much are you printing of that currency? Because they're not stupid. They know it's like, hey, if you take and double your currency supply and I'm sitting on a bunch of your currency, you're just devaluing it. you're devaluing the currency, and you're basically, in a way, you're stealing from me, right? Like if I had $1 trillion, I'm country X, I'm China, I got $1 trillion, and you go double the money supply, and it's like, okay, well, now my $1 trillion is only going to buy 500 million worth of stuff, 500 billion worth of stuff. Sorry. So I wish we would understand that. And what's sad about it is, like, if you looked at it, even though the debt clock is running, there's so much we could do, like, to like really right the ship for like long term, to say, if you looked at it and say, well, where do you want this country to be in 20 years, 40 years, 100 years? And you can start righting the ship. But no one's going to do that. We're going in the opposite direction. So, okay, that's it for this one. Talk to you later. Bye.